Hi guys, this is Kelvin here once again. I want to do a quick check-in on some few pairs as today is Friday my side and it's weekend and the trading week has come to an end, so this is a time to rest. But those who trade on deriv and those who trade on synthetic indices and some other pairs like cryptos that do run in weekends, I think are still monitoring and kind of active with trades. Um, so I want to go quickly to the chart and deal with so first let me look at I would try to look at some volatility pairs like volatility 25, volatility 50, index, and probably volatility 21s. And then if I still have a lot of time, I can look at gold, US 30, just look at a quick touch on them and see what is happening. So this should be really, really very quick. So let me first start with VN50 index. So this is VN volatility 50 index. This is the pair. This is the daily time frame. I like to look at the chart from the bigger standpoint or like the weekly, the monthly, and see what is happening. So this pair is still bearish in the long term, and um, there are some opportunities for some bullish reversal that is trying to map up around here, but it's still bearish though. Bearish in the sense that so if I want to look at from what I see here, what is the last high, important high that has given us a break of structure to the downside. So I can see this area as one point of a high that has given a break of structure, a break of structure, a break of structure. Um, I can see this point that dropped down and took this low here. So this is an important point. Okay. From this high, this low was taken. This is a break of structure. Then it's pulled back to retest quickly or shortly, and then also gave us this low, pulled up, and also broke structure to the downside. So if I can count, I can feel that this area or this high is one area that we should be very so this is what I would consider as my important um significant high. And then I would also consider this area as a high, but kind of an internal important high. Yeah, though it also has broken structure and has given us an indication to the downside. So the bearish trend continues, and after this low, we have not seen any break of structure again after this low. So if I want to use the current high, internal high here to the low that it gave, and if we are still um, looking at price action in the simplest form, like if we have a high and it breaks structure and the trend is down, then we expect um, this break of structure is an indication to continue going bearish. We expect a corrective or a pullback to above 50%, which is premium zone. And we have it. We have the premium zone. We have premium zone price comes up to 78.6% and then drops. But dropping did not give us dropping down did not give us a new low. Okay, so price pulled back into the range, into the premium zone again, into 61.8% here, and then dropped to this place, and then has pulled up into the premium zone again. So what do we do at premium? We sell. We short at premium, and what do we do at discount? We buy. We go long from discount. So um, if this swing range is valid, then we should likely see a drop to this area. We should likely see something like this, like a drop like this. We should likely see something like this, a drop. But if, because we've been on a downtrend for a long time, if this pair wants to do a major pullback to the upside, probably testing, let's see which of the places that we could think of that price could test. Probably testing this yellow area, this high. Let's say from the top, we have price that sterling from the top here, let's say up to this low here. So at least let's just say price wants to pull back to 23%. Okay, let's say price wants to pull back to this area, 23%. Normally we will expect price to pull back into, let's say, equilibrium first, and probably into discount, sorry, premium into this area. Price pull back into this area here. Yeah, but for now, because that's going to be a very long-term move, for now, we will just think of price as, let's say it wants to pull back into 23%, the yellow area. So if this is the case, then for this pullback to happen, if this is the time where price wants to do this pullback, and if this pullback wants to really happen, then two things. We might have a sweep to the downside and get a new low, sweeping all these like double bottom or equal lows here, relative equal lows here. We might get a sweep to the downside once more time. And then from the downside here, price might push to the upside to retest that yellow zone. That is one thing. The other thing is we might also see price push back to retest either this area, this low here, or it might break that into this, let's say, support here once more time, and then give us like a triple bottom and then go back up to retest. But at least the first area that it will target is this area again, or this zone again, because we've had 78% of that already. So if price is to come up again here, it's likely to just sweep it out or break it. So here, that is if price wants to do a major pullback. But if not, from here, I anticipate price should be able to drop and then give us a new low, retest these lows, and then continue its bearish trend. So these are the initial or general possibilities that I can look at from this 50 index pair. So let's get on. So this is the 24-hour time frame. This is a 24-hour. This is a 24-hour. Let's go into let's go into, let's say, the 8 hour or 4 hour to see what is happening because we are in the premium zone, so we anticipate sales. So let's go to the 8 hour and see what is happening. So on the 8 hour, okay, so let's just say first I want to identify my support resistance, and the new concept about support resistance that I'm using these days is the concept of the precision support resistance line, or the magic support resistance line. So what is magic support resistance line? Any price or um, any price area or um, point on the chart or on any asset where price has used as both support and resistance. Okay, so is support and that support and resistance is a zone, but I'm more particular about the exact point or the exact price where um, which has been used as both support and resistance. So for example, let's look at this area where I just put the red line. Let's look at the red line. So if you look at this red line area here, if we look at this red line area here, we can see around here, price moving from down, hit this point, and sold. Moved above it, retested the same red line, and then bought. Came below it, as we saw a bearish engulfing or a big bearish candle closing below it, it continued to sell. When it went above, a big bullish candle closing above it, it bought, retested, and then bought. Big bearish candle closing below it, it retested and sold. Now, if we come this way, a big bullish candle closing above it, moved up, retested, used it as rejected on it, and then bought from it. So we could see that around or on this line, price is either buying or selling. Okay, price is either buying or selling. So this point can be an important point that I would take note of on the chart as my magic precision support line. Another point of interest or line of interest is this area. Another point is this guy. As you can see, so you see, this is the 8 hours, so you will see this as wicks. But when price hit this area, you see rejections off that line. And then around here, price hit and close above it, retested, use it as support to move up. Then also price came, close body, big body below it, retested and used it as resistance to drop. So we see price come back to it, hit it, rejected of it, on it, bearish engulfing, and then price sold. And then price comes back again onto it right now or currently, rejects off it, and is trying to form a bearish engulfing. But the 8 hour current 8 hour candle hasn't closed yet, so we cannot say it has formed a bearish engulfing. We cannot say that yet, but it's trying to form a bearish engulfing. And if it holds, then that will cause price to fall or to sell. The other thing is that so when price hit 78.6% around here in this retracement, it dropped. So when it dropped, it took out this low. So this is the most current low that gave that high. It took it out. Okay, so taking this low out is called break of structure. So this is a structure break to the downside. This shows that it's showing an indication that below this area, below this line, price is likely to sell. Okay, so this is the indication. Break of structure is an indication that below this line, price is likely to sell. Price is more likely to keep selling below this area. Um, so then after the indication, we see a pullback or a corrective. Okay, so the corrective comes to, so if we take this as a range, if we take this as a range, the corrective comes to 61.8%, drops down back into that line, and then pull back up into that same 61.8% area. It's still likely price will want to go back into 78.6%, but for now, uh, we don't have that indication yet. There should be a body close above here for us to aim that area, and we don't have that body close yet. We have seen a rejection, so we have to wait for that to happen. Um, so the other thing that I can see, so of this break of structure, if this premium zone within this range from here to here is going to hold, if this area is going to hold, then we are likely to see a drop from here into this place again, or probably this yellow area. And then from here, like I said already, price can buy or continue to sell. Yeah. What is the other thing that I see around this pair right now? So the pullback, this pullback looks like rising wedge, which is an opportunity for a buy at wherever it will stop. This looks like so. But for this rising wedge, we should have gotten this sell that would take this low out, but it didn't take the low out. So why that will happen, I don't understand. But that shows that this pair is ranging too. But it still is moving up on a kind of rising sideways wedge form. So this is still an opportunity. This pattern is still an opportunity for a sell. And we should anticipate either it sells up to here again or probably break the lows. So those are the other things that we can also take note of. Another thing is that I kind of see this whole pattern as a head and a shoulder pattern where I feel like I have a left shoulder here, I have a neck here, and I have a head here, and I have a neck broken, and I have a right shoulder that is formed here, and price has come up. The right shoulder they couldn't sell much, but it just came here, and then price has pulled back again to retest the right shoulder. So if this engulfing happens around this precision support resistance line, let me make this line a blue line, a blue line. If this happens, it's likely that we're going to see the drop. Okay, and if it breaks the low, or it breaks the lows, probably this will be the target where this trend line for the head and shoulder, this area will be the target. But if we hit this area and reverse up, then it means the head and shoulder pattern has not fully worked. But the target for this head and shoulder pattern, if it's going to play, should be this area. It should give us a new low, should be this area for the first target for this move. Um, That is another thing. So head and shoulder is like is for reversal. Um, yeah, if market wants to reverse or market wants to get back on track to continue. If market has been moving at a particular direction and it wants to reverse or get back to the other direction. Double top, double bottom, head and shoulder pattern, they are all strong reversal patterns that the market forms to be able to give us that kind of reversal. What is the other thing? So from here, let me just move to, so now we know that there is a potential for a sell around where price is right now. Okay, around where price is right now, there is a potential for a sell. Um, Only a body close above this blue line will signal a buy. But once we've rejected off and we are engulfing, it is going to signal a sell. So let's move quickly to the 4 hour. Let me move quickly to the 4 hour and see what is happening. So on the 4 hour, we see a big bullish candle that pushes to the upside, and then one bearish candle that pushes down to sweep it and rejects up, and a new 4 hour candle that has opened. This is forming like like an engulfing pattern. This is forming like an engulfing structure. So this pattern that is forming, like we have um, a high, a higher high, and then a lower high, a lower high. So this pattern that is forming is like a reversal pattern of below this support. Okay, so we are getting this below this support. So um the other concept is that the reason so off this blue line, below the blue line are buyers. Below the blue line, so sellers are on top of the blue line, and put it this way. At the top of the blue line, we have sellers. Okay, so sellers are sitting on the blue line, okay, on top of the blue line. So anytime price comes to the blue line, sellers push it down. Sellers here, they push price down. Here, they push price down. But what if the volume or the money that the sellers have is not enough at a particular time space or at a particular time? The moment we see that the sellers become weakened or their money or the volume that they have, the liquidity that they have is small, we will see a bullish big candle close above that area, and then the bulls will be in charge. Okay, that is the only time that this place will fail to hold or to push price down. So if we see a bullish close, this was a bullish move, but the next bullish candle should have closed, should have moved up to close above this blue line. And that would be that we might likely retest and then get a buy to the upside. So we're still playing. There's still a lot of room from this blue line back to this red line, from this magic support line to the next magic support line, red line down here. There is still room for price to come down even to this area and still go up to give us a body close above the blue line and keep buying. Okay, internally here. So sellers are here. Now, I've already said if the sellers are not able to push price down and they get weakened, and there is a bullish close or body close or engulfing above the blue line, buyers will take control and the buyers will buy. Same thing applies to down here. Okay, so sellers are on top, sellers are on top here, and then buyers are below. Buyers are below here. So why? Anytime price comes here, buyers push it up. Okay, so price comes here, goes below. The moment is above with the body candle close above that line, retesting, buyers push it up. Okay, so let's check. Um, yeah, so buyers body close, it buys. Now, at the when price is below, the sellers take over. Okay, buyers are supposed to buy from here, make the price go up. But if they get weakened, sellers take control and sellers push the price down. Okay, so that is the concept. Though buyers are below here, pushing the price up, if they get weakened, sellers will take control. Though sellers are above here, okay, pushing the price down, if they get weakened, buyers take control. So the concept is just simple. We buy at a body close um, and an indication above resistance, and we sell at body close and indication below support. That is the concept. So though buyers are here, I am viewing the market as if this place should get weakened so that sellers will sell. So though buyers are buying here, I want to frame a setup to sell rather here. So I'm waiting for the buyers to be weak so that I can sell. Okay, so it's like I want to go against the norm. That is the concept that I'm using here. So though sellers are sitting here, if they got weakened and were not able to reject this price and push the price down like here and close above, I will find a buy entry up here. Okay, but now we want to sell because we are seeing that the sellers are in charge. Until that happens, we cannot buy. Okay, good. So from the top down and all the um, concept that I've been putting together, we can sense that there is a likelihood that if we get an engulfing on the 8 hour, the 4 hour is already giving us a bearish pattern. But um, if we get an engulfing close on the 8 hour, it's going to give us an early signal for a sell. But let's still move into the smaller time frame, let's say 1 hour, and see what is happening. So on 1 hour, this is what is happening. Okay, this is what is happening on the 1 hour. So we have 1 hour has already engulfed the previous bullish 1 hour candle. Like we have three 1 hour candles that have closed consecutively, like yeah, concurrently. And then we have a pullback, and then we are seeing price as engulf again to the downside, and we are seeing a mini pullback. So we want to frame a sell setup until price gets a body close above here. For now, we want to frame a sell setup. I want to look for sales. So what should I do if I want to look for sales? One, within this blue line and the red line, I want to look for sales. Okay, until if price is to push up and close above this blue line, I'm not going to look for sales again. It means my stop loss for this sell is hit. But for now, I'll be looking for sales. So how do I do that? Let's go to 30 minutes. Let's go to 30 minutes and see. Okay, good. So on the 30 minutes, let's see. Okay, so okay, so we have this previous high here. We have this previous high. That drop down, retrace, broke structure and retrace again. And then from there, that we saw a break of structure again, and we saw that sell to the downside. And from that, this is the pullback from this leg. So the move started here, came down here, and then now we are seeing a pullback. So let's see at the point of the break of structure, let's see. So what is the last low that gave this high? The last low that gave this high is this area. Okay, probably this is the external low. This low gave this high. So if this low is to be taken out, we have a break of structure. So now we have a break of structure up to this point, and price pulls back into, let's say, equilibrium. Let's say 50%, 61.8%. Okay, so, but normally we expect price to pull back into premium. This is more of like equilibrium. Okay, so we expect price to pull back into premium. Now it gives us equilibrium price, and price sells to give us a break of structure to the downside. Now price pulls back for the corrective, and then it's comes. So let's see where price will come. Now, what I like about this is anytime you see the magic support resistance or magic precision line confluencing with the 78.6%, that is going to be a sure setup. It's going to be a sure setup. If price fails to give you the move you are looking for at that point, that confluence, then it means the move is rather going to go to the opposite direction. So you should quickly frame your analysis again and then jump on the opposite trade. So let's see, we should expect price to come to either 61.8% or 78.6% or 100, anything like that. And now price only gave a pullback of equilibrium and then kept dropping. Now in the future, let's see where price has come to. Okay, so we see price has come straight into the 78.6%, which is where we want price to be, which is the confluence we are looking for. Okay, at that point, this is the magic optimum entry. Okay, it's an optimum entry. It's an entry with precision. Okay, so even if you don't make, because from here the goal is that we should take this low out where price sold to. We should take this area out. That is the goal from here. So even if we don't take it out, we will at least get maybe 78.6. We will at least get price come to another discount zone, like below 50% of that area. And from here to 50% alone is a very good catch. It's a good trade. Okay, it's a good trade. If you are getting this setup. Good. So and then this area is also close to the next support resistance or precision line, which is the red line. So this red line is going to be TP1 or first target if this sell is going to hold. But the most important thing right now is that price pulls back into the precision line, which is also at the same point with the 78.6%. And we are seeing an early engulfing on 4-hour bearish pattern at the same point where sellers are also in control. So this is the confluence we have. Therefore, we have to frame trade. We have to frame our setup. Now, how do we frame the setup? One, we can take the entry off the exact point, okay, because we've already mapped up already. That is, if we miss this entry, what we have to wait for is a break of structure and a pullback to get our entry. Now, do we see a break of structure yet? After the reaction from the blue line, yes, this is the last low that gave that high. And we've seen price engulfs, take it out, and then a pullback. Where did the pullback come to? From up, we measure the pullback, we get a pullback of 50%. Okay, so 50%, ideally, we should expect price to pull back into premium, but equilibrium is also good because we've seen at equilibrium around here, price gave us that sell back here. at equilibrium here. Price gave that sell. So at equilibrium, we are likely to still get the sell. Though we should still expect price to come up some time to come to retest the equilibrium again, or probably dip more into the 61% or even retest this area. But for now, we should be good because we have a break of structure and we have price pulling back into equilibrium. So we should be good. Another thing is that at the exact place, which is this area, price has sold. So let's see, around here, price has dropped or sold before. Okay, so let me pull it back up here. So this is a point where price has hit and sold. Okay, and price comes back close to it, sells. Now, price engulfs bullish candle, engulfs that area, closes above that line, okay, retest this, and on it, boom, push to the upside. So this is a buy setup, okay? This, what happened here is a buy, okay? Here is a buy. Now, why is it a buy? Because price sells off here. Now, it get the body close above it, retest it, and then boom, push up. So this area is a buy. Body close, uses it as support, and then buys. Now, after buying, price drops down. Okay, we look at the bearish candle. Look at how big it is, and look at where it closed. Okay, price closes below where it bought from. It closes below that place, which means it's a break of structure. After doing that, we get a pullback. Price gave an indication of a body close. Look at the green body, close above that line, signaling a buy. This close is signaling a bullish move. But quickly, we got a rejection and a bearish, 3 bearish candles plus this. This bearish candle is big enough to give us that engulfing we need here for a confirmation to go bearish or to be selling this candle. Okay, and all is also happening below the line, which is where we want to be selling. Okay, because above this line, it will be buys. Anytime price goes above this line, it will buy. Why? Because it gave us indication from this big green candle that because of the close above this black line of this candle, above here it will buy. Why did it not buy and engulf? Because we've hit an important area on the higher time frame here, and then we have gotten that reaction. And two, this pullback also came into this area is like a failed order block. Okay, failed. This should have held price to go up, but it failed. Okay, so according to ICT, this is a failed order block. Okay, I think this is a breaker block. Yeah, so price breaks it and pulls back into it. At the same time, there is a fair value gap here, which is the low of this candle and the high of this candle here. This space is a fair value gap. Breaker block, fair value gap. Price breaks structure. Off precision support 78.6% area or zone. Okay, below support, price pullback. There is nothing else to look for. All we need right now is a second break of structure. Okay, we need a second break of structure. Another thing I see is that price looks more of like a flag. Okay, this looks like a flag. So if it's a flag, a bearish flag, then when it breaks out, it's going to drop like this. It's going to drop. Okay, and I expect the distance that it gave from here to here, I expect that same drop after if it's able to break down. I expect at least this distance. Okay, getting close to the red line and then the discount zone. Probably before it pulls back up again. And let's not forget that price is likely also to pull back into this zone or this area for another buy. So we have to bear in mind that if we are taking an entry from here, we should know that price is likely to pull back into this zone and then sell. But our stop loss is if price closes body above here, we are done. Um, we are done. So now we are bearish. Everything shows that we should go bearish. We only want to confirm more with a second break of structure. And also, though the 4 hour is giving us a bearish pattern, 8 hour has not closed yet. Okay, and the daily time frame too, we are now getting price trying to drop to engulf the last daily candle. So everything is at the early stage. Okay, everything is at the early stage. So we just need to wait, to keep waiting a little bit and then see what will be happening. Let's keep waiting and see what will be happening. Okay, so let's see. Let's see. Yeah, so I like to put this line here and then take this one off. Let's go to 15 minutes. That's where we'll take the entries if we are to take this trade. So our price pulls back into fair value gap, breaker block, and then pulls down below the magic support line, which is this black line. Let me change the color for this black line and make it blue. Price pulls below. So as long as price stays below this blue line, it's a sell. So the sell entry is here. Sell entry is here. And the stop loss is here. Okay. Stop loss for this sell is just this black line above here. Okay. So the moment it pushes up and wants to close above these rejections off here or inside this breaker fair value gap, it wants to close above that, we will not hold the sell. We will wait for it to go and do what it wants to do up. When it gives us a new indication for sell, we will enter sell. But for now, the entry for this sell is off this area. Okay, and the stop loss is just this area. And the target is close to the red line. Let's say the red line. That's the TP1 or the immediate target right now. So let's see how this trade plays out. Let's see how it plays out. Let's see how it's going to play out. Let's see how it's going to play out. So on the 15 minute, we already kind of have a break of structure. That's the second break of structure. That an indication has been given. As you can see, there's a bearish candle that closed below that black line. On the 30 minutes, it's a wick, but on the 15 minutes, it's already showing that indication. Yeah. So if we get another close below, then that will be a proper indication on 30 minutes, and that will be good. That will be good. Okay, so the other thing I want to check is to find confluence with this trend lines. So let's see. So we have, I can draw a trend line here. Okay, so let's see. Get it done. So if this trend line is to break, it means we are going to go more bearish. How can I draw another trend line? So from this red line, because the red line is our current target, I can draw a trend line from the red line off to yeah. Good. Yeah, it's a perfect trend line. Good. And we can see that price hit the trend line and the black line at the same crossroad here, which is very, very, very important. Trend lines are very powerful. They are diagonal resistance and support um, corners that we can price react off many times. Okay, so diagonally price found support here and pulled back up. Now we break the support because we close body below the trend line. Price moves up to retest the trend line. That's the meaning of this concept. Okay, so anytime we go above the blue line, this blue line, and then above the trend line, that is, we are done. Even at this early point, we should consider backing off until we are below the trend line and then the black this line, the entry line and the trend line. As long as we are below them, this is a sell, or this will go for a sell. Um, what else do I want to add? Yeah, so for now we have a setup. Let me see if I can have a counter trend line drawn. Yeah, so we have this high, we had this high here. So where did this high break? Yeah, this high was broken here. So for the buy, breakout happened here. So we can have this counter trend here. And that is looking also good. So if we are above the counter trend line, price is likely to push up, but going below the counter trend line is going to be a good thing for this sell. So first we got a close below that counter trend line too, which is a sell, and we pull back up above it. We got an engulfing to come on it, and we close a little body below it on the 15 minute, and price is pushing up again back into the trend line. This current 15-minute candle just started. It's just 2 minutes in. Okay, it's just 2 minutes in. So let's see how far it can go. Let's see if it will go and retest the trend line at the trend line up again, or let's see if it will reject, because it still has a long way, like 12 minutes to close. So let's see if it rejects off, as long as it's below this trend line, counter trend line below here, as long as it rejects and comes below here, we are safe to be selling. We are safe to be selling. But as long as it hovers above this counter trend line and also above this black line, prices above this black line, there is a potential that we will still keep to get a retest of this trend line and entry above here. So let's keep an eye. Let's keep an eye and let's see how it goes. Let's see how it goes. So we have all the options now. Let's just wait for price to do its own thing. And whatever indications it gives us, we'll keep refining the setup, and then we can see what to do. So now we have where we will consider this setup not to be valid, and we have where we are targeting. And we have where, if price gives us an indication, we will consider flipping this setup for a buy. Okay, so if price is to push up and get a body close here, then we'll just expect a pullback or a retest into this trend line here again, or this area here. Okay, where the entry is becomes our buy entry. If we get a body close, we'll expect a pullback into this area, and then we buy. Okay, that's just simple. But for now, no. Yeah, so let me go to another trade. Let me go to another pair. Let's go to VIN25. Okay, volatility 25 index. Okay, so I like to start from the 24-hour. Yeah, this is the way it looks. Currently, we are ranging off this area. Volatility 25 ranging off this area. But inside this area, what do we see on the 24 hours? So for me, I can see two things. One, we are likely to buy, and two, we are likely to sell off where price is right now. It's both likely to buy and likely to sell. So why do I see a sell? Because this pattern looks like can be a flag. This pattern here can give us a flag with the leg coming down like this. Okay. The other thing is that this pattern can also be a flag up. Okay, flag. This can also be a flag up like that. And we have a balanced price range or fair value gap resting here. We tap into it small, but probably price may want to go up and then tap into it more and drop down and maybe go up again, or probably sweep down. I don't know. I don't know. But we have this area of interest, institutional reference point here, which is very important for price to target. Um, okay. Now, price has been bullish already from down here. And it made this high and then drop down to retest the high, retest, pushed up, gave us a break or indication to go more high. After that, it dropped down for corrective, didn't take this low, and then boom, went up. So I can see two things here. The intention is to keep moving up, but I can see this low was broken when price did the correction, and that low is important because it gave us the all-time high or the high point. So if this high is broken, it signals break of structure. So this is like a break of structure indication that price wants to sell. Okay, this is the indication that price wants to sell this break. And look at the bearish momentum that broke that place. The bearish momentum was big. Look at these two bearish candles. Okay, so it means that off this area, price off this area, where did that bearish move start? I think somewhere here. Yeah, off this place. It means off here, price wants to sell. Okay, so yeah, so that move started from here, somewhere here. Yeah, good. Off this place, price wants to sell. So let's see, just with that line, and this place is like support resistance where price is resisting. And if it breaks, we will go bearish. This place. But let me just clear this support thing. So if this low were to break, then I will be convinced that price wants to sell because this is the last external low that gave the high. But this low is not broken, okay? This did not take this low out. So we don't have that break of structure yet. With the break of structure we have is an internal one. So let's see if that internal break of structure will help us to go. Let's see if it will help us to go bearish instead of going bullish. Let's see. It's something that we have to see. What other thing do I see? What other thing do I see? I see I see like something like left shoulder, neck, head, and this could be a right shoulder. So if we break this trend line, price is likely to sell. If we break, yeah, so you see that red line, off that red line, that's where exactly where price even sold to, and we are getting this pullback or retest. If we drop to close below this red line, we are likely to sell, okay, from just this pattern that I'm seeing. So let me try to draw a trend line off below here to see if it will have confluence with the head and the shoulder. So I can draw a trend line right from this area. Look at where the touches, important touches will be as it goes up. Bang, one. I can also draw a second trend line that is just looking at these areas. Maybe this might not be too important, but let me draw another trend line. And this time I'm targeting okay, so I can even draw this trend line from just this point. Can even draw from this point? No. So I can just draw that trend line just from here. Okay, good. So I have like two trend lines. Let me draw a counter trend line. I have a counter trend line. Let's see here. That should guide me for now. If the counter trend line breaks, then we have opportunity to go bullish. If the counter trend line is respected and does not break, and price rejects and closes below the red line and breaks the trend line below, then we have opportunity to go more bearish. Because as I said, this pair is having both opportunities. That's what I see, at least what I see. Okay, good. So we can see that this first trend line has been respected. So let me go to the 8 hour to see what is happening on the 8 hour. So on 8 hour, we can see that this area was respected when the pullback happened. The trend line, this area to the cross of the trend line has also been respected. Drop down, move up, break of structure, pull back again to retest, and price is trying to go up again. Let's see if it will respect the trend line. Yeah, and this red line is very important. It's an is that is the magic line, precision line. Price buys off it, indication to go bearish, buy, okay, buying off it, selling below it, buying above it, selling below it. So that red line is very important. Um, so this is the 8 hour. So this setup can give us both a bearish and a bullish move. So let's just see what is going to happen. Um, I want to identify another support resistance or precision line that might help us to get an early entry if we want to sell. And if we want to buy, the entry is already here on the red line. So the buy is already happening. Because we've tested this trend line multiple times. 1, 2, 3. We've tested this trend line multiple times here also. Did this one also tested? Yeah, got close to it. Yeah. So let's see. Um, so I can see I'm looking for an area where price has hit and sold and has used the same area to buy on the 8 hour. Let me make this one blue. Okay, so price sell here, sell here, sell here, but above it here it buys to the top. Then here too we can see price sells here, and from here too we can see price sells. We can see price hit it and sell, hit it and sell, hit it and sell, and we can see above this blue line price buys. Okay, so we have a lot of information to see that place as a respectable line or area to be interested in. So with this said, now it's very bullish now. But with this said, let's go to, and we are expecting both a bullish and a bearish move. So with what I'm saying, it means that above this blue line and above the trend line is a buy. Below the blue line and below the trend line is a sell. Okay. And below this red line and below this trend line to below here, a body close around here is more sells. Okay. So we have the logic now. Let me go to 4 hour. Let me go to 4 hour. Yeah, this 4 hour is giving me it's trying to push close to the blue line, which is the entry zone. What confluence can I find with other concepts? So I can see that the 4 hour here is this place is a fair value gap. The low of this is a fair value gap. Yeah, it's a fair value gap. This is a fair value gap. As a matter of fact, there is also a fair value gap on the right side, which is a balanced price range. Bullish fair value gap, bearish fair value gap. But let me go to 30 minutes to see where the break of structure happened. Okay. So there is both a break of structure to the upside. You see this move broke this high, body close above the blue line, body close above this high also, above this area. So let's say this could be a retest or retracement for the buy, which we are seeing now. But when price was dropping below from these highs, what is the last low that gave the high? Is this guy. This is the last low that gave this high here. Is this guy. Is this guy. So it makes sense that price retests it And if we have a break of structure of this blue line like this, what should we expect? And did we get another break of structure or another break of this low? Yes, we got an indication here. So below here, price should sell on this 30 minutes of, yeah, 30 minutes. So from this high, if we can measure on our fib, where do we expect to take an entry if we want to sell? We take an entry above premium, on above equilibrium, which is premium. And preferably where on 78.6%, which is this guy. And we are fortunate that the 78.6% also is having confluence with the blue line, which is our support precision line, and also would be below the trend line. Um, so this will be our spot to sell, to go in for a sell on this pair. This area will be our stop loss is the high above the high here, but the moment we get a body close above this trend line, which means if stop loss is hit, the next thing is we should expect a retest of that blue line. And as long as price comes above the trend line and the blue line, we enter for a buy. We go in for the buy. So this is two setup in one. Two setup in one. Because already I said the pair, I see both a sell and a buy on the pair. Though I will gravitate towards a more of a sell than a buy, but let's see what is the market that will tell us what we should do or what we should look for. So let's see what is going to give us. Let's quickly check on what is happening on the 50 index. Oh, so the 50 index is still so yeah, so the candle, that 15-minute candle that pushed up finally came down and closed below. This close below or rejection is a sign that if this current 15-minute candle, which will also close in the next 10 minutes, if that candle also rejects and then comes below the black line, then we are likely to go more bearish. It's likely to keep selling. Okay, so but if it goes up, this would be like an inverted hammer. If it goes up and keep buying, then it's going to push up. But closing, you see, look at the red candles. All have closed below each other. Okay, so it's piling up for us that we want to break to the downside. So let's see what will happen. Let's see in the next 8 to 10 minutes what this candle will give us. If it's going to pull down and then close below. Let's see. But for now, it's trying to also push up to retest or something of that sort. So let's see what will happen. Um, yeah, so this is the 30 minutes on 50 index once again. Yeah, so yeah, the blue line is the area where we should be. 15 minutes. Let me go to 15 minutes. Okay. So 15 minutes is already giving us a little indication for the sell, but I won't enter a sell or I won't sell yet. Okay. So let's see how it goes. Let's see if it will retest. Yeah. Let's see if it will push up more. We now have 61.8%, which is a good place to get a sell. Let me see what is happening on 5 minutes. 5 minutes. 5 minutes looks pretty good. Yeah, I think the 5 minutes looks pretty good. but we don't have a break of structure on 5 minutes yet. Um, yeah, so this point too is a point where you can sell because we are in premium. So the most important thing is we have to be in premium. It's not always that the market will give you that optimum entry that you're looking for, but can still, we have to still wait a little and see what is happening. So still wait and see what is going on because this is a bullish momentum. It's a bullish momentum, so we have to be very careful to have price action have its way. Allow price action to dictate what we should do. Okay, so 5 minutes is looking pretty good if we get, so let's say if we get a push down to this area to retest these highs, and probably we get another push up and we get a push to break this low, then probably on a small retest, we can sell. Maybe. I don't know if it will happen this way, but and if it breaks to retest and takes this low out, and it goes up and it fails to make a new high and drops again, then the next retest might be our sell. So let's see how all these possibilities play out. Okay, so I think I should be good for now. We have a buy logic and a sell logic, both framed on this V25 index. So let's see. If we are selling to the trend line. The TP1 is just to the trend line here. And if it gives us a body close below an indication, then we will continue to hold or frame more cells. And if we are buying, our buying will be to this trend line above here to see how it will react. And then probably we will target that balance price range above on the daily time frame that we saw. So let's see how all turns out to be. Let's see how it all turns out. Uh, okay. What other pair? Um, Gold or US 30? Let me see quickly. Maybe I can look at gold another time in another recording. I don't want this to be too long, super long. So maybe I can look at gold in another recording. But let me quickly check um one last pair. Let me check V25 1S. V25 1S. Yeah, I think I'll look at gold. So this is V25 1S. Yeah, from just this site, what pattern do I see? This is the 24-hour. So I can see, I can draw a trend line like this. I can see the trend line is broken with a full bearish candle and price pushed up above the trend line, which is funny. And I can see this counter trend line here, which we should be looking out for. If we break above it, that is going to signal more buys. If now we've gotten the break below it. So if we come below it again, then we're going to drop. So these are the initial ideas. But what is the last low that gave us this high? So these are questions that I ask myself that helps me understand the structure of the market. So this is the high. What is the last low that gave the high? Last swing low. This is the last swing low because up until this time, okay, so this low gave this high that broke this consolidation. So we can say the last swing low is this guy. It is this price that gave this high here. Though it pulled back into here, and then it gave that high. So internally we can say that this high, which I'll make it a red line, we can say that this low is the area or the price that if we are to break or close below it, we can start to frame a sell because that will mean that it is a break of structure. But a more external low is this, or probably this guy. So, but this area. So because this is an uptrend and the actual move started from also somewhere here. There are a lot of information when you check on MT5, but this derived trading view does not give all the information. So, but let's see if we want to measure from here to the top. Yeah, so it's likely that if price might want to sell, it could give us at least 78.61 to 78.6%. That will be below equilibrium, which is discount. And from here, we will be likely to see price buy, probably break the trend line and the red line again, and boom, continue the uptrend. Yeah, this is one thing that we can see. Okay, we can see price come here and see this 78.6% has confluence with this resistance here that was used as support for price to buy. Okay, so everything adds up very well. Okay, so this is another red line. Yeah, so let's see. Now this red line above you, okay, so let me make this one a blue line. Let me make this one a blue line. This one is a red line. So this blue line, this red line are the most important points on our chart. So right now, what is the last high that gave this indication for the sell? That's what we have to look for. The last high that gave this intention that price will want to sell, because this body closing, this big body closing below the trend line and also below the red line support resistance line is the indication. This pull to the upside is like a pullback or retracement. So I can see that high is here. So let's frame an entry around this range. So from this high, price has pulled into equilibrium already. Equilibrium, and then we are in premium 78.6%. That place happens to also be close to the trend line, and then let's see if we can have a magic support resistance at that angle. And then that can help us to be confident in this trade if we want to sell. So let's go to the 8-hour and see what is happening. 8-hour time frame. Okay. What about 4-hour? Okay, so 8-hour time frame. We have a high here. Then we have a low here, and we have a break of structure. So with a break of structure like this, we expect a pullback into premium, which we are already seeing the premium pullback. Do we have a point that confluences so we have this area here, which I will make a blue line. Let me put a green line there. So off this price, we see a sell of this price. We see a sell of this price. We see a sell. Okay, yeah, baby, you want to sleep? Okay, let's sleep. Uh, you want to learn how to analyze the chart? Yeah. Hmm? Hmm. Okay. So let's see. I can see that we get a sell-off from here. We get a sell-off from there. Price goes above intention made to buy, but it drops. We get a sell-off. So if we get here and we get a body close above this area, it will buy. But if it hits here and then we are getting around this area, if we are getting an engulfing bearish candle or rejections here, we are likely to sell from there. Okay. So let me check up to this area. Let me check here. Yeah, above the green line, we buy. Price comes to it as support and buys. Let me check. Okay, so that's all the information we have. So we have some confidence. We have some confidence around the green line, so we can lean on it. But the moment, so these setups, the stop loss is small, but the risk to reward is very good because if you take an entry here when you get the confirmation and even it pushes up to hit stop loss, if it depends on the loss size you use, but if it's going to play out, you get more than if you lose. So let's see. It is 8-hour. Let's see. 1 hour. What is happening on 1 hour? Good. So 1 hour, as price gets close to that area, as price gets close to this area, we are seeing kind of an M, like a double top being formed on this 1 hour. So let's see. But for here, from this high, we first got this low, and then we pulled up into this area before we broke structure finally. Okay. So let's see the first pullback that price gave us. Let's see the characteristics with it. So we get a low here and price pull back to equilibrium. But normally we would expect price to pull back into 61.8% or 78.6% in order to sell premium. But it gave us only equilibrium. So there's a higher likelihood that price might pull back into the 61.78 RAM before it sells. I can't tell. I don't know. Okay, if it will do that. Because where price is right now is we are close to the equilibrium again. If we measure from the full range, we are above equilibrium. We are in premium already. Okay, if you measure from the full range, we are in premium. Okay, but if we measure from where the first break of structure, the first pullback happened, we are still not at equilibrium yet. So it's likely we might not get that push to the 78.6% at the top. It's likely price might reverse just from here. Okay. So that's something to keep note of. The other thing is that, let me go back to 30 minutes. 30 minutes. The other thing is that when we got a pullback to 50%, did it make any retracement before breaking out? Yes. So we got first we got this 38% pull up, and here we got another 38%. So even with this range here, if we want to measure this range here, we expect price to come to a collab discount in this zone before we can get a good entry for a sell. Good. But so if with this range, internal range here, we have price pulling to 61.8%, dropping to 38, and we have price pushing to 78. Something close to 78, yeah. And currently on 30 minutes, we are seeing an engulfing candle, an engulfing pattern. So everything shows that we are very close. So two things, is either we frame a sell here or we wait and see if price will come here. Then we frame a sell. Two things. Sometimes we might not be sure of where it will go. And if you keep waiting and thinking it will go up, it might not go up and it will leave you. So that's why trading is risky. You have to risk, sometimes be aggressive. So let's see. But on this 30 minutes, what will make us frame a sell here? What will make us sell on this 30 minutes here? Let me go to 15 minutes. We will only sell if now price is breaking structure here. So we'll only sell if it succeeds giving us an external break, which is breaking this area or closing here, and then pulling back into this range. That means we're going to have something like this. I'm not saying it will sell to here, but we're going to have something like this, which would still bring price back into the shaded area. And then we can take our sell entry from somewhere here. That's if we are going to use this area. So we still can take a sell from somewhere here down. So let's see, this is like a first sell entry. Stop loss will be just above here. And then we will anticipate a second sell shorten entry somewhere also here. Somewhere also here. Maybe if price get there or goes there. If this one fails, in case it gives us a break of structure and a pullback and it still fails. But above, if it closes above the trend line, there's no way we're going to be looking for sales again. We are done. We'll be done. Yeah, we're not going to look for sales. We'll be done with everything. So let's see how that also plays out. I will give updates about this in other videos or other recordings. And this recording is for learning purposes. This live is for learning purposes. This is not a trading advice. Watch and learn. If you have questions, please ask the questions through the chats, and then I will respond. If you want to learn how I analyze like this and how I get these precision entries, get in touch with me and I'll be more happy to teach you or show you how I do it. Let's check quickly on the 25 index. Okay, so the 25 index still pushing down. Okay, good. Yeah, it's pushing down to where I was expecting exactly. Yeah, so let's see how it will react to this highs when it retest it. Let's check on the 50 index. Oh my God. So the 50 index moved up again, but engulfed on the black line. And currently, if the current 15-minute candle closes below this black line, is going to push to the downside. Is going to push to the downside. As a matter of fact, I already took this trade, or I entered this trade. I entered this trade already. I entered this trade already before from the entry around here. Yeah, I think around somewhere here. I entered the trade. So let me show you guys the profit I'm making right now, or how the trade is turning out right now. Let me show you what it's doing right now. How do I snapshot my trading? My MT5. Okay, so I can show that on WhatsApp. Yeah, so this is the trade. 50 index. I'm making $49 right now. And the trade is in the initial entries. We have $6, $6. Then this is like a US 30 trade that I took, and then market close, so it's caught up. But the 50 index trade is here. So the trade hasn't gone any far yet. It's still at the entry. And so let's see how it plays. And if it's able to break down, I will anticipate the trend line here, then I can close some profit. Okay, I will anticipate up to the trend line here and I can close profit. But I can, if I measure this leg here to here, I can anticipate another move like this. Yeah, so it's equally similar. So let's see if it will play out. And I'm holding a tight stop loss on it. The moment I see we have a big close above the black line again, that shows price is going to push up, I will close my trades on small profit and wait to take a new entry. But for now, I'm holding because it wasn't able to go and close above. Yeah, so everything is okay now. Everything is set. Let's see if the breakout is going to happen. So with that, or with this, I want to say have a good, blessed weekend. And then I'll see you again in another tutorial or another discussion or overview of pairs. And I think I'm going to do gold and US 30 and other forex pairs, Euro USD and others. Thank you so much, guys, um for watching and for listening. And then if you have questions, like I said, you can let me know. I hope you learned something. Yeah, I think we should be good. Amen, amen, amen.